Welcome back. Previously we discussed about a cash flow statement, its format, and we have done in detail the computation of cash flow from operating activity using direct method. So let us discuss some of the cases that includes the preparation of cash flow statement. Next case, balance sheet of Sagar Limited are given below. Just like a fund flow statement preparation, you will be given a comparative balance sheet where balance sheets of two dates will be given. The items will be almost similar to the item which you have seen in fund flow statement. Apart from that, and remember the thing is that regarding the adjustments regarding provision for tax and proposed dividend, the same adjustment has to be followed in cash flow statement also. Almost all the adjustments and concepts which we have followed in the fund flow statement is almost similar in case of cash flow statement also. So in this case, income tax paid 30,000, dividend at 15% equity capital was paid, provision for depreciation on plant and machinery on certain date 60,000 and another date 70,000. So whenever depreciation, provision depreciation, opening and closing balance is given in the adjustment, we have to prepare its accounts, and during the preparation of particular asset account, opening balances or provision for depreciation has to be added back. I hope you all guys know how to prepare that, and we have dealt the similar patterns and adjustments in case of preparation of fund flow statement. A machine costing 20,000, book value is given, was sold for 10,000, and we have dealt the same adjustment in case of fund flow statement, which is also similar to that. The only thing is its format is different and some of the items has to be shown separately. That is the only concept. Prepare a cash flow statement of the company. So previously we have discussed how to prepare a cash flow statement. It's a format consisting of 3 parts, and we will be preparing the statement. So before we go into the statement, you need to prepare some accounts in order to find out certain items that has to be taken in the preparation of cash flow statement. So first one, let us begin with plant and machinery, because plant and machinery has some of the adjustment that is very important, and also at the same time it will be confusing. We have done the same type of question and case during the preparation of fund flow statement. So plant and machinery, let us begin with recording opening and closing balance. Plant and machinery opening and closing balance is already given. 3,40,000 and 3,60,000 is given in the balance sheet, but in this case provision for depreciation opening and closing balance is given in the adjustment. You need to add back. I hope you know the adjustments and concept. We have discussed that part in the fund flow statement, and almost all the adjustment and cases is almost similar to fund flow statement, so I will not be repeating the concept and explanation again and again. Just go through it. If you have any queries, just let me know. So opening and closing balance is written, and in the question it is said that machine costing certain amount was sold for 10,000. So by cash sale 10,000 is written, and provision for depreciation is also given in the question. Here depreciation on machinery is said that during the year costing 20,000, its book value was 12,000. So the difference between these two amounts represents depreciation. So we got the provision for depreciation 8,000. And regarding once a sale is done, definitely there will be profit or loss. Here the book value is 12,000, it was sold for 10,000, so a loss of sale 2,000. So we have noted down all the items in the plant and machinery account. If you take the total, there is a balance in the left hand side, and the difference amount can be considered as the purchase during the year. So plant and machinery account is completed. Next one, provision for depreciation. We need to prepare a provision for depreciation account since opening closing balance is given. We will begin with opening as well as closing balance. It is given in the adjustment 60,000 and 70,000. And next item is depreciation. This provision is depreciation is related to the plant and machinery, so the depreciation amount has to be shown in the provision for depreciation account also. Depreciation amount was about 8,000. Since there is no specification regarding depreciation of that particular asset, we can assume that the difference in the book value and cost amount is considered as the depreciation on that particular asset. So 8,000 is recorded. And finally, if you take the total, there is a difference in the right hand side. It can be considered as provision for depreciation made during the year. So we have prepared plant and machinery, provision for depreciation, and we need to prepare another account, provision for tax. It is an adjustment which we have learned, and we have discussed that part numerous cases in the fund flow statement. So preparation of provision for tax, opening and closing balance is written, and it is already given in the question, but in the adjustment side it is given 30,000 has been paid. So there is a difference in the right hand side. The difference can be considered as by P&L. So we may have recorded almost all the items based on the information given in the adjustment. And regarding dividend paid on equity capital, since there is no information regarding, see, if you go to the balance sheet, you can see that equity capital is almost same amount in the opening as well as closing, so no account has to be prepared. So let us begin with preparation of cash flow statement. And the cash flow statement begins with preparation of cash flow from operating activity. And the first one begins with net profit for the year. In the first part of the cash flow from operating activity is almost similar. It's almost same as the fund from operation in the case of fund flow statement. So the same procedure and methodology is followed here. The only thing is the difference in the pattern and standard and format of preparation of cash flow statement. All the other concepts and principles are followed, the same patterns are followed in cash flow statement also. It is almost similar to the fund flow statement. So net profit during the year, since no information regarding net profit given in the balance sheet as well as adjustment, the next thing is reserves and surplus is considered as the profit during the year. The difference regarding the reserves and surplus is considered as the net profit during the year. So 1,40,000. From that, you need to add back non-operating expenses. We begin with the items given in the adjustment. First one, dividend at 15% equity capital was paid. So you need to find the 15% of equity capital. The equity capital given 3 lakhs. 3 lakhs into 15,000, you will get 45,000. Next one, depreciation. So in the plant and machinery, you can see that you have to go for the all the P&L items and depreciation items. So first one, depreciation. And regarding provision for depreciation by P&L 18,000. Since provision for depreciation account is prepared, the depreciation amount from the provision of depreciation account only considered, not the depreciation shown in the plant and machinery. In the absence of provision for depreciation, this amount can be taken. So 18,000. Next one, provision for tax by P&L 32,000. Loss on sale of machinery 2,000. So you have got cash flow from operations before working capital change. And after that, you need to consider all those working capital changes item, such as increase or decrease in current assets and increase or decrease in current liability. See, in the current items, we add back all the decreases in current asset. See, sundry debtors, there is a decrease amount, and decrease amount is shown here, 17,500. Next one, decrease in bills receivable, again see difference of 1,000 rupees. And increase in bills payable, we add back all those current liability there which have an increase in trend. See, bills payable, there is an increase of rupees certain amount, 9,500. And next one, outstanding wages also increase, so the difference amount is shown. So we have recorded all the items that led to the inflow of cash, that is all those increase in current liabilities items and all those decrease in current assets items. Next one, increase in inventories. You need to deduct all those items that leads to outflow of cash. Increase in inventories, there is 24,500. See inventories, there is an increase. Next one, decrease in sundry creditors 7,500 because the amount is paid back, so there is a cash outflow, it has to be deducted. After adjusting that, you will get cash flow from operating activity 2,36,000. This is not the actual cash flow from operating activity because you need to adjust one more item, tax paid during the year. For that, you need to check for provision for tax, out of which you need to take to cash tax paid 30,000. So after adjusting that, you will get cash flow from operating activity 2,06,000. We have completed only 1/3 of the preparation of cash flow statement, and you can either use capital A or Roman number 1 or 1, anything for your discretion and convenience. So once you have prepared net cash flow from operating activity, next you need to prepare cash flow from investing activity. As I have discussed earlier, investing mainly concentrate on purchase and sale of fixed asset. For that, you just go through the accounts that you have prepared, mainly the fixed asset items. Here plant and machinery account is prepared. In that there is a purchase and sale. Before they go into plant and machinery, let us discuss about the land and building. See, land and building, there is a increase of amount 20,000. So 10 increase in land and building means purchase. So 20,000 is shown in the brackets. Next one, plant and machinery. In the plant and machinery, there is a purchase as well as sale. So the sale amount of 10,000. Sale means inflow of cash. So 10,000 is added. Next one, purchase of plant, that is a purchase 50,000. Since it is a purchase, our cash balance is reduced. It is considered as a negative amount. So once you adjust this, you will get a negative amount. Remember, it doesn't mean that you always get a positive amount. Some days you may come deficit. So net cash flow from investing activity is considered as the second part. You can either give it B or Roman number 1, 2 likewise. So 60,000 negative amount, so you have to put it within brackets. Remember to follow the patterns as per the format. Once you prepare cash flow from investing activity, next you prepare cash flow from financing activity. As I have mentioned earlier, it mainly concentrates on fixed liabilities. Apart from that, you need to remember some of the extraordinary items. Let us begin with first one. Preference share capital 2 lakhs in the beginning, closing for 1 lakh. That means 1 lakh has been paid back. So 1 lakh is a cash outflow. So it is negative value. Next one, dividend paid, because it is already given in the additional information. 15% equity capital 45,000. It is a payment, and a dividend paid is considered as a financing activity. There are no other items regarding the financing asset. So let us take the total. You will get a amount of minus 1,45,000. Minus means cash outflow. In that sense only minus. So we have almost taken A, B, C, 3 parts, and you need to add back all these 3. Add together A, B and C. A means cash flow from operating activity, cash flow from financing activity, and cash flow from investing activity. Once you add together all these 3, you will get amount of 1,000. Just go through the total amounts. You can see that 2 items are negative and 1 is positive. That's why you got a smaller value. You may think that we have added together all these items and got about 1,45,000 in case of financing and amount of 1 lakh during investing activity. Why we got a net amount of 1,000? Because negative amounts and positive amounts has to be adjusted accordingly. So net cash flow during the year is only 1,000. And how to check our computation and the preparation of statement was right? From this amount, you need to add back opening cash balance and bank balance. In the question, opening cash balance and bank balance are 6,500 and 13,000. You can add together these two, you will get 19,500. If you add together these, since these two are positive amounts, if you add together, you will get an amount 20,500. Now, if you go to the balance sheet to check that, if you add together these two amounts, you will get the same amount. So our preparation of statement was right and our computations and adjustments are dealt accordingly. So this is how you need to prepare a cash flow statement on the basis of the details or adjustment given in the question, just like the method we have followed now. Now let us discuss another case. The income statement and balance sheet of Pacific Limited are given below. Sometimes you may be given an additional statement, that is income statement, apart from a balance sheet. In such situation, some of the items may be seen in the P&L account which previously has been given in the adjustment part. So you have to dealt each individual items accordingly. See, this is a question and income statement and balance sheet is given. See, go through the income statements, familiarize each items. It consists of non-operating items as well as operating items and consider the items accordingly. Balance sheet is also given. Book value of the plant was sold was 18,000. You are required to prepare a cash flow statement of the company. So let us begin with various adjustment case. First one, let us prepare plant and machinery because that was an adjustment that was given. In the question it is said that plant was sold for 18,000 and in the question plant and machinery opening and closing balance is there, and be cautious in this question. Income statement is given. Make sure is there any item that is relating to plant and machinery. Yes, there it is. Depreciation on plant and machinery and loss on sale of plant. See, for this purpose only this statement was given. So you need to consider these two amounts while preparing plant and machinery account. So let us begin with plant and machinery. Opening and closing balance is already given in the question. Plant and machinery 4,80,000 and 5 lakhs. Next item. In the question it is said that book value of plant was sold for 18,000 and here we have written 15,000. How did we got the 15,000? In the question it is said sold for 18,000, but at the same time if you check the income statement you can see that there is a loss on sale of plant of 3,000. A book value of rupees 8,000 book value of the plant was rupees 18,000 and at the same time it is said that 3,000 was generated as loss from the sale of that particular plant. So it means the asset was sold for 15,000. Then only you can say that it was sold at a loss of rupees 3,000. That is the concern. So the cash from that particular sale was rupees 15,000. Though naturally the loss from the sale of that asset was 3,000. Next one, depreciation is already given in the question, 22,000, so it has to be recorded. So once you take the total of both sides, you can see that there is a difference of amount in the left hand side that has to be considered as the purchase during the year. So we have dealt with plant and machinery. Next, let us prepare the statement, that is cash flow statement during the year, and we will begin with cash flow from operating activity. So for beginning with operating activity, we have to start with net profit during the year. You may see that plant and machinery, profit and loss account of a certain amount is already given in the question. You can either take the difference between these two amounts, or you can take this 52,500 from this statement, or you can take this 1,02,500, anything according to your discretion. If you take the total of these two, you will get the same 52,500 amount. So that's not an issue. So whether you have to begin with 52,500 or 1,02,500, let's see. Here they have begin with 1,02,500. You can either begin with 52,500 or 1,02,500. And now I will explain why they have begin with 1,02,500. From the net profit during the year, you need to add back all non-operating items. We will begin with first one, depreciation 22,000. See, 22,000 we have taken. Next one, loss on sale of plant 3,000, that also taken. See, they have added only those two items, because why they left this provision for tax and interim dividend paid. Usually these two are non-operating items. Why they didn't add back? Because they have begin with 1,02,500. This 1,02,500 is an amount which was the amount which is unaffected by provision for tax and interim dividend. If 52,500 was taken, you have to add back these two amounts, then you will get the same 1,02,500. Since they have begin with 1,02,500, that is the amount that was left there before adjusting these two. So they need not have to add back these two amounts again. That's why this 3,000 and 20,000 was not added. If you have taken 52,500, you have to add these two amounts. Then also you will get this 1,02,500. So that was the concept. Just do it accordingly. So after adding these non-operating items, you have got 1,27,500. From that, you need to deduct non-operating incomes. First item, dividend on investments, 2,500. Since there are no other non-operating incomes, you can find the cash operating profit before adjusting working capital change, that is 1,25,000. After that, you need to adjust all the changes that happened in current assets and current liability, and you know what are the items that has to be added back and what are the items that has to be deducted. We added decrease in debtors 15,000. Take the difference between the debtors opening and closing balance. There are no other items, so you got 1,40,000. From that, you need to deduct all those items, current assets or increase in current assets items and decrease in current liabilities item. Here there is an increase in stock 8,000, decrease in creditors 15,000, and finally you got cash from operation 1,17,000. From that, you need to deduct income tax paid. Then you will get net cash flow from operating activity. Next one, cash flow from investing activity, sale of plant, $15,000. Next one, purchase of plant, 60,000. It's a negative amount. And next one, purchase of investments, 80,000. And next one, dividend on investment. It is an income on investment. Dividend on investment. You may think that dividend is relating to financing activity. Yes, it is. In financing activity, all those dividends paid is considered. Whenever he received dividend or whenever he earned dividend, that is considered as an income from investing activity, because when dividend received means we have earned certain amount of dividend for our investments made in some other concern. So that is actually an investing activity. So dividend on investment is an investing activity. 2,500 is recorded. So by considering all those amount, you will get net cash flow from investing activity minus 122,500. After that, cash flow from financing activity, issue of shares 1 lakh. If you go to the share capital, you can see the difference. Next one, debentures redeemed. It is also shown in the balance sheet. And finally, interim dividend paid 20,000. Considering those amounts, you will get net cash flow from financing activity 60,000. After that, you need to add together all the three heads: operating, investing and financing, and adding together all these three amounts, you will get 24,500. Adding three amounts means negative amounts has to be considered accordingly. In 24,500 you need to add back cash in hand. See, in this question there is an additional item, bank overdraft. See, bank overdraft is shown in the liability side. Just like a cash in hand and cash at bank, bank overdraft has to be dealt accordingly. Never consider bank overdraft as a current liability, because it's just like a negative part of cash in bank. So you have to take accordingly. Opening bank overdraft has to be taken here. Instead of adding, it has to be deducted. And closing bank overdraft has to be adjusted with cash in hand, closing cash in hand and closing cash at bank. In this case, there is only closing cash in hand. So we add opening balance of cash, but we deduct the opening balance of bank overdraft. Bank overdraft is a liability item, that's why we deduct it. So by adjusting that, you got 28,500. If you adjust closing cash balance, cash in hand 11,000 and bank overdraft 15,000, you will get 4,000. See, here closing cash balance is 11,000, bank overdraft is 15,000. If you adjust these two amounts, you will get a difference 4,000. See, you have got negative 4,000. So this is how you need to prepare a cash flow statement. And remember some of the adjustment which we have dealt down, since almost all the principles and concepts followed in this case and as well as in the previous case is almost similar to the fund flow statement. That's why we are going in a hurry. If you have any issues, just let me know. So we will discuss about the next areas in the next sessions. Thank you.